Hello guys, welcome back again. Yes, Scene here. So I want to do another video. And this time it has to do with technical analysis, and what I want to discuss with you is what I came up with. It's a name called stock life cycle, and what I mean by that is, personally, every time I try to look at any given stock, I try to look at the big picture. All right, what I mean by that, any given stock, I will look at the chart by the monthly, weekly, and then intraday. For me, that's the first thing I will do. I'll try to look at the big picture, and because what I mean by the big picture is I want to know where the energy is going. Is the stock is going lower? Is it heading higher? And I want to know what part of the stock is what phase is the stock is, and what I mean by that, and that's what actually what I want to focus on today. If you do a little Google search in here, right in here to my right side, you will see that like I will say, I don't know, 99% of the time, 100% of the time, the stock is gonna have a life cycle. Some of them will just be trading like sideways, you know what I mean? Just like that, sideways like that. Some of them, but majority of them, they're gonna have a life cycle which has four phases. First phase, I don't know if you know this or not, probably you do, will be just an accumulation phase right in here. I'm going to draw this a little more again, and then we'll discuss it a little more deeper. So you have first phase, which is the accumulation phase. Will be will be a lot of actual support, like will be a lot of hedge fund buying the stock in here, and once the stock getting contracted, you're gonna have some VCP pattern, you're gonna have some building up in here. The stock price will get tighter and tighter, and then it will break in here, and then it will go to the second phase. So you will have a breakout here after the first phase, and the stock will just keep going higher, making those higher lows, higher highs and higher lows, and this is where the money is, right in this second phase. Stock again, right? I mean, before getting to stage 3, stock can make multiple bases within this phase. Will make a lot of bases. Could be cup and handle, it could be anything, it could be a flag, it could be anything, and then it will be a point where the stock is gonna stall. It won't do much. Like you won't see. Stock will have like couple distribution days, 3, 4, like in a couple of weeks, and then you will see some high volumes in red. That actually, once you start getting your iron strains, you will know that the stock is not pushing any higher, and then that's gonna be stage 3, which is basically stock will stall. It won't do anything. It won't have the gas to push any further higher, and then after that you will see break of that support right on that stage 3. And then from there it will just continue and going lower by making lower lows and lower highs, and then the cycle will start again from the beginning. So for me, I think this is really important. If I'm gonna buy a stock, I'm not gonna go and just trade it blindly, man. I want to know what it is. Like I said before, what is it trading higher? Is it trading lower? What phase is it? Is it an accumulation phase? Does it have like a long base and it's just gonna break out of it? Like let me give you an example. It was Amazon. I'd like to give an example so you guys have an idea what I'm talking about. Right in this area here, the stock. See, here's a life cycle. We can actually talk about it right in here. Let's say we're having a base. This is like base. This is phase 1 right in here. Let's see if I can put a note. So that actually will be phase 1 right in here. Stock it won't be perfect, but you have to get the idea. Like phase 1 right in here, the stock will break out. In this case, with Amazon just gapped up, and then from there it just keep trending higher. Like I just actually made a video, talked about trending higher and trending lower, If you want to know where the stock is going, is it trending lower and higher? Obviously, you will just put some couple moving averages, and it will tell you that one moving average will be right in the other one. In this case, the 21 is above the 50, and you will know that the stock actually is going trending higher right in here. Like, and actually the stock was going higher way before that. So we have phase 1, and then we have phase 2, which is the breakout. This is actually, for me, I'm a swing trader. I just try to catch and find stock on that very first one. If I don't, I try to find a value on the next to those moving averages. So I'm trying to get into pullbacks or another consolidation, what have you, and then follow the trend until the end. So Amazon, right, like we just discussed, was in this second phase, and we'll go back to Amazon. What is Amazon? Stock just kept going higher, respecting those in this case 21 moving average. Every single stock will act differently. Back in if you do some research back in the 80s and back in the 1929, every single time is a little different. Back in the 1981, the Nasdaq was respecting the 10 moving average. I think recently it's just been respecting the 21. So every time you'll notice that once you put this moving average, you will notice that stock move sideways in here, and they just keep going. So this is all this phase 2. So we'll put it here, phase 2. All of this actually, just stock has been just going all of it. So this is what for me, this is what I kind of like to find. If I can find it right at the breakout, that'll be awesome. If not, I'll just trade with pullbacks and ride the trend. So phase 2 and all that. Look at that stock, man, just be pushing higher. So this is phase 2. Man, I keep going. I'm sorry. I keep going to that right in here, and then after that, to a certain point, once the stock moves a certain percentage, the stock will eventually stall. And Amazon, in this case, he just did stall right in here. Right in here. How are you gonna know that? Is there a way how to find out the stock's gonna stall? Actually, if you pay attention to the price action, for me, a big one actually, once you start breaking the 50, like in here, or the 200. Some people use the 65 moving average. Some people use the 40. Whatever you like. On a volume, actually, let's see the volume here. Right in this day, you can notice right in here some stock. Somebody was selling heavily in here. Institutions that start selling to get profit. And that's actually what I like to discuss here. Like, I don't just jump in blindly in the stock. I want to know what it is. So if I zoom out and I see that the stock, like for example, like this stock Amazon here, like if I zoom out and let's say I was right in here, right? Let's say I was right in here and I said, okay, the stock's been going higher. But if I zoom out, let's say I don't see this stuff. Whatever on my right screen from here to here, I don't see it. Like, let's say the present day is here. And then I say, well, let's say I want to get into this stock. And I said a stock, it did actually broke on a heavy volume in here, but still it came back and it claimed it back. But the stock, since the breakout, how much did it actually... did it move? Let's say the stock actually moved right into my left side, 91%. I'm like, for God's sake, man, you gotta give that stock a break. It has to correct, and it didn't actually correct. It did like once here, but it claimed it back and it kept going higher. This actually was a halfway. This is like a cup and handle. If you notice that with me, like right in here, this is the base, and then like right here. I'm just trying to go along, so you can find it a way to get in. But again, like if I find it here, I'm gonna have to go back and zoom out and see how much the stock did came along. So in this case, almost like 100%. I'm like, dude, the stock, I mean, it has to like correct. It doesn't mean that the stock won't keep going higher. It might, but once I see that the stock that did a lot, like so it has to relax, and I see those volume in here, like right down here, some higher volume. So and then it came back, retested 50, went back up, and it didn't do much. And I see that these bars, these distribution bars right in here. That's why I like volume. I don't have to confirm with any MACD or stochastic that the stock is not really pushing any higher. So I want to see that price break above this high, and I see those volume bars, man, just start picking up. You know what I mean? I'm like, okay, so it's like a warning, like, hey, the stock. So I will have that in my favor. I'll have the stock moved over 90%. I would have some distribution bars right in here. I'm like, hold on a second. Let the stock prove itself before I jump in. So you get the idea, and then after that, we'll start breaking the 50. For me, as far as I'm concerned, once they break the 50, man, that's a big red flag for me. And then look again, that increase of that red volume, and that will tell me, that will answer actually the question: do I still have that interest for me to get in here? Like, no, I want the stock to prove itself, and I want to catch the breakout. I want to be the first one in here. Even if I don't catch it here, I'll try to catch it like in here, for example. Get in here, like right in here, or get in that cup and handle, catch some of it at least, you know what I mean? But yeah, this is what I mean by analyzing the stock. Know your time frame, know when you know what you're gonna get in. I'm not gonna just jump in blindly to the stock. So I hope you get the idea. And then after that, the stock just broke out. Look at those big volume, man. It just this is like, oh, okay, stock would just want to take a break. And then from there, I can follow it if the stock wants to move back in and claim that 50. And then actually it did here. It doesn't mean I'm not gonna jump in right in here until this is actually a flag right in here. The stock wants to do something here. First it came back, reversed, came back, claimed the 50, which is really important, and the stock just kept going sideways. I'm just giving you an example here. I'm just for the education purposes only. And then what did he do? You could actually get in if you want to be first in body. You can get in here if you want to. But yeah, you have a solid reading tape here that the stock really pushed higher. You have some volume coming in here. That green bars. Look at the red bars on the consolidation here. It just been lower, man. There's no much sellage. So the stock just held the 50. There is support from the institutions. They want to buy that stock from that area of value. And then the stock broke out, and look at that volume just coming in. All right, so I will know that the stock made a huge move over 90%. All right, I was gonna get in back here, but the stock did stall, didn't do much, and then we saw the big red volumes in here. That's another warning for me. So I was like, okay, the stock moved that much, man. I'm already mistrained. I could have got in here maybe in halfway or something. But yeah. You get the idea. I'll let it relax, let it cook itself, make a new pattern and all that, and then if it's ready, if it proves itself, then I'm already here. The stock market won't go nowhere, and then from there, the stock actually just moved a little bit higher, and we'll talk about some selling a technique later on. You can actually, for example, you can use a low. As a technique, you can take some profit right in here, and you can move your stop loss in here. Once it breaks that 50, man, you're out, and we made some profit from here to here. How much is that? That's 8%. Whatever I take, whatever the market today will give me 8%, tomorrow will give me 50. So I don't control how much the stock market will give me, but you get the idea. So every time I look at the stock back in here, I try to look at the stock in the big picture. I want to see what phase is it. Is it first phase? Is it accumulation phase? Is it the second phase? Is it at the end of the second phase? Is it stalling right in here? Or is it about to break out? Another example I want to give you is actually it was square. If I zoom out, I look at the weekly here. Look at the stock back. I just want to give you an example. The stock first IPO, this is actually weekly, so may give me a resistance. So I was able to put a resistance here. Like I said before, just connect the dots. I just mentioned that in one of my previous videos. Connect the dot to know where your resistance is, and the stock from there, just let it prove itself. Most of the time I won't trade IPOs. I want some feedback from the stock before I start trading it, and the stocks start making lower highs, higher lows, and then once it reaches right that area of resistance, look what the stock was doing, like right in here. Actually, it was just consolidating. For me, that's some sign of, and along with the decrease of red bars, and look at that increase of those green bars right in here. So that's a sign for me that somebody is buying it. Do I'm gonna buy here? No, I'm not gonna buy. I'm gonna have to wait. I can buy probably consolidation, put my stop loss right below here. Is that low? But yeah, if I'm gonna buy, I'm gonna have to know what I'm gonna exit. That's number one. It's for sure. That's a rule you don't want to miss. Again, the stock came in right to those highs. It took a break after what? After 60, almost 70% move. It has to digest, and then boom, that day, it broke out. So we have phase one. This is phase one, actually, all of that, phase one, and then we just broke out. So I want to catch the stock right when it broke out. And how long has the stock's been consolidation? The stock's been consolidation for 1.2 years. So that's actually a great one. When the stock broke out, it just went trading on that second phase right in here. That's why I like to emphasize on you guys, look at the big picture. Know what environment are you trading. Are you trading on a bearish market? Are you trading in a bullish market? Know your time frame. Are you day trading? Are you position trader? Are you investors? And know where the stock, what phase was it? Is it 1, 2, 3, 4? That's it, period. And then the stock, the point that I want to make here, that the stock won't make just 1 or 2 pullbacks and it will reverse lower. Well, nobody knows that. As a matter of fact, Square, once it did broke out on this day here, it did made multiple bases. Here's a base one here, and then it rallied, and the stock wanted to correct, right? And actually never really, if you notice this move here, it never even corrected 50% of that move. So that tells me, look at that decrease on that volume in here, that the stock wants to move a little more higher. And again, I'm not analyzing the stock because I already know what's going to happen in the future. At the current time, like we just did with Amazon, I want to know if is it respecting that 21? Is it respecting the 50? If it start cracking that 50, man, I'm gonna stay on cash and I'm not gonna trade it at all. I don't like stock trading below the 50. So the stock made another base. I just want to give you an example that the stock will make multiple bases before it stalls, and then it will fail. So we have breakout, consolidation, trending, another base here, another phase one within. So phase one within the trend, another base again within the trend, and then another base again here, accumulation without within the trend, and then once the stock start cracking, this is with the weekly time frame. Once the stock start cracking and then it's been hitting lower, you'll know something's happening. So if you came into this time here and you want to trade Square, you'll be like, oh man, look how much the stock moved, man. It's gonna keep going to 200 and all that, man. Pull back, pull aside. Look at the chart on the monthly, look at it on the weekly, look at what you face at, look how much the stock already ran. In this case, the stock ran 455% just from the breakout point. We didn't even calculate how much it did move from the bottom. I just calculated from here, from the top, from the breakout to here. So it was like, yeah, 485%. For God's sake, man, the stock has to take a break. And you look at what phase is it? Yeah, this is phase 2, and then phase 3 usually, like we saw here, phase 3 will just like it could be head and shoulder, it could be just support and resistance, simple as that. In this case, man, the stock just kept pushing it lower and lower and lower and just moved sideways. So almost like a flag here. I mean, stock just moved lower, and then it was flirting with that 50 on the weekly, and it just broke, reversed back. I think that a lot of volume. Yeah, look at those red bars, man. Those are always look at the volume, man. Reversed back. It made a high, so this is your new resistance right in here. It made a high and it came back down, so this is how we know this is the high. Came back, and we'll say, well, once it breaks here, we might have a chance that the stock might come back again. Well, the stock came back, retested that previous high. You'd be like, okay, stock has some to offer. Let's wait for the breakout. Let it prove itself. And the stock didn't. So that's a big sign for you right there. The stock wants to go lower and doesn't want to go higher no more. And then look at that bar again, right in here, man. That's a big sign. You don't need no MACD. You don't need anything, man. The tape will tell you. You don't want a confirmation. You can use MACD whatever you want, man. It just, along the way, I realized that those don't confirm anything. The price will confirm everything for you. Price, volume. Those are your ultimate indicators. Yeah. So yeah. That's my point here is the stock within this phase, within that second phase, it can do multiple bases. Just really, if you come in late to the party, right at that phase, man. Look at the stock. Look how much it ran. And then look for the stalling signs. Look at the volume. Look at how that action is. Are we trading on the upper half? Are we challenging the highs, flirting with it? Are we just broke down one of those moving averages? We're just moving sideways. I mean, those kind of things that you want to look for. I'm sure if you do some homework, you'll find some more. We'll talk about them like once we start discussing some stocks. And you can see that the stock just been moving here sideways for a while. And then see it even touched it again another time, and it just broke out. Right now, square mat looks really strong. Actually, I did traded it. I don't remember when. I made a good. I think yeah, it was actually right when I saw it. Trade into a range here. I got in right in there, right in that day. Actually, yeah. So that's my point. Next point I want to talk about is. Know your plan, man. Know where you exit before you even put in that trade. Know where to exit. I mean, if you like the stock, and I won't blame you, man. I used to have that in me. I just like over trading. I just want to get in. I just want to get in, man. Know where you exit. Have some type of like low. I think when I got in here, I think my stop loss was like, I don't remember. It was like, sure, it was not more than 3 to 5%. Sometimes like the 6%. My stop was really close. I don't remember exactly what I put it. You can put it right in here. You can do the math. Yeah, know what you plan, man. Know what you, before you even hit that buy button, know where you're gonna exit. That way, once the stocks start going against you, like no emotions, you already put your stop loss. Don't delete it like I did before. I think I mentioned it one of the videos before. I deleted my stop loss and it starts like going against me. And then let the stock write and then tell you the story. You don't have to predict. You don't have to do anything. You put your stop loss. You find the right stock. Put your stop loss. Let it tell you the story. And once the stock give you a feedback, and you do not have to actually predict, you let it tell you if it's gonna come back against you and hit your stop. If it's gonna keep going, it's going. It's as simple as that. You can always take your profit into strength and hold it along the way. Hold the whole position until the end. I used to do that, to be honest with you. I don't do it no more. It just is something that you're gonna prefer. It's up to you. For me, even though I swing trade, I like to sell something in this trend. Back in time, I was against the idea of selling something in this trend, but I came along and this stock actually humbled me quite a few times that like, okay, I'm not going to hold on to it. And there was some stock where I was holding the whole position and it was fine, no problem. Again, it depends on your environment, what time frame you were at that time, what was the market was doing. Was it going up? Was it going down? Was it going sideways? So all these variables you gotta take them into consideration. What else? If you want to take profit, yeah, we just discussed that. Once the stock hit your stop loss, exit, no questions asked. Know that you are always can get back to the trade. And actually, this is one of the trade that I've done. What is it? DHR. I'd like to give you guys an example while I'm talking. I saw the stock moved from here. This is recent. I think, what was that? No, June actually. It was June 20th. I saw the stock. This actually was optimal for me to get in rather than pullback. The stock made what? Right from the break, and then it did move what, quite over 20%. And it did move sideways, hit that 21 supported. Boom. And I actually got in late. This actually was not me to get in those days. Got flushed. Boom, right at that. Scared me the most. Got out. It wasn't even that. Yeah, it was a little bit of volume. Increased. Flushed. Got out of the position. I'm like, okay, the stock doesn't want to move higher. And I got out and I just waited for it. The stock didn't. I was thinking that the stock didn't break that 50. It didn't. It bounced right back. That's what they do. They try to fool you. Stock moved sideways and was waiting for it. Came back right back in here, and the stock just keeps going higher. That's it. Have that flexible mind, man. This is what the best lesson that I can tell you. Don't say, man, it has to continue. No, it doesn't. I'm gonna keep saying this, man, until you guys get it. I mean, it just as far as if you've been trading for years, man, I think you know this. I don't have to say it overall. But if somebody just started trading, man, be that flexible mind. Put your stop loss, respect it, get out. And it's really important to get into the right time of the stock. You know, it could be for me here, it could be for you here. Just trade out of base. If you're like, for me, like your support resistance, man, if you want to make sure you get in, make sure you get in right at the breakout. You know, make sure you don't, if the stock moves, man, like 20% and you just want to get in, most of the stocks sometimes will correct at 20%. Some of them will keep going like 40, 50, 60, 70% won't even correct, but majority of them, they will correct at 20, 25%. They will pull back to the moving averages. That's why important get in that price, man. The entry is very, very important. And I don't want to talk too much here. I want to conclude by a conclusion here. It's basically just conclude whatever I just said. Find the right stock that about to trigger the entry, whatever it is, breakout like me or consolidation, whatever your strategy is. Find the right stock, watch it, put in your watch list, list it. Once it triggers it, now you know that you have an idea where to exit. Put your stop loss. We talked about this. Buy your stock and let it tell you the story, man. It just if it goes in your favor, you're right. If not, it will come back and hit your stop loss. Hey, don't like we said in that trade I just told you. Comes back, flush me, I'm out. I'm okay with my stop loss. 3, 5, whatever, 7, 8% your max, which you should be. Not more than that. Get out. If it watch it again, you don't have to leave it. If it could be one of the biggest winner. If it comes back and again it breaks whatever it does, get in again, and then that's it. Ride it. You know, don't take nothing personally. And then that's it. Follow the trend. Whatever whatever your strategy is, follow the trend until the end, until it breaks, and keep raising those stops. If you're like me, I used to back in time. I used to use those lows as an exit strategy. You know, which is still sometimes I do. You can find a bunch of strategies. There's no such thing as this will work, this one doesn't work. If once you know all the tricks and all that, man, you can combine them, and sometimes I take profit when the stock just gaps up out of no news or nothing. I don't hold stock to earnings, but let's say if it gaps up like this one, it just been trading nicely over all that time. Period. Right in here. Let's say tomorrow this one just gapped in here, 220. You think I'm just gonna be sitting and watching it? No, I'm gonna take some time. I'm gonna take some off the table because it just broke out. You know what I mean? I'm not gonna wait for it. You know, I'm not here to make 1,000%. It would be nice to make 1,000%, but hey, if you can just make that 20, 15% over and over and over, man, that's good. I'm not saying I'm against 15, 20% but like Fiverr here, man, I won't ever forget this stock right out of the base, man. It just some stock, man, it just strong. Like how much this one just moved from here to here, man, 100% in two and a half months. I'm not against that. If the stock gives me, if the market gives me this, man, I'll be honored to take it. But sometimes they won't do this. Like, you won't find majority of the stock doing this. They will correct to those moving averages. And if you just find those that 20% take some profit right the other, man, you'll be fine. As long as you respect those losses, they have to be minimal, 3%, 5%, whatever they are. All right, and stock, man, just looks fine. They didn't give anything back. My goodness, man, I love this one actually. And SE, they would actually, man, this one actually did correct, came back to that resistance. But after that, man, look at that. Look at that 8 moving exponential, man. It's just like beautiful. Here I thought it was cracking right on that day, and it did actually. This actually kind of, I was actually hesitant when I saw that. I'm like, do I have to get in? I'm like, oh yeah, and I looked at it again, like, man, how much the stock already ran, like right in here, like 103%. The stock has to correct, and I'm like, well, let's wait for a new pattern. That's why I'm not chasing it in here. I'm not doing it. It could keep going higher, but I would rather trade from pattern, not than just chasing it like that. Like, this is what we just talked about. It's the CRWD. I traded this one back. I remember, like, back in here actually. What, in that day, I think. Yeah, look how much the stock did move actually. We had a almost like a reversed head and shoulder. We went from here all the way to the highs, like 68%. Man, come on, stock. Like I said before, it moves 28%, 20 to 25, and it does correct. This one moved 68%. Yeah, almost 70, and now it's, what is it doing? It's just going sideways, consolidating those gains. Look at the volume again. Let's look at volume. We had some red bars in here, and then there's low volume. It's consolidating, I would say. It did broke that 50, but it did claim it right back in here. So it's just moving sideways. It looks healthy. All right, guys, so this is what I want to talk about. I hope this is helpful. Give me a like if you find it helpful again. Subscribe if this is your first time watching it. More videos are coming. And you take care. Bye-bye.